Wasn't the NVIDIA earnings as good for you as it was for me? Because on paper it was insane. $200 billion revenue run rate, 75% gross margins, guidance raised across the board, and the stock still couldn't hold the after hours pop. At the same time, Circle just had its best day since the IPO on stablecoin profits. Bitcoin is trying to dig in above 68K, and DeFi is suddenly a story of revealed winners like Sky and Morpho. So in the next 10 to 50 minutes, we are going to unpack what macro stocks and on-chain flows are really telling us about risk appetite right now. All right, let's start as usual with the cross-asset overview. The last 7 days was pretty good. We have precious metals up again, silver 14%. We have digital assets equity up 5%. I come to that in a second. Ethereum, the outperformer, 5%. Even MicroStrategy is up. The Coin 50, our bellwether index for crypto, 2.9%. And we have the old story again, international better than the US. So I think let's go to the charts. You see, we have this big rotation going on still. Value is outperforming growth. And you see, normally that's not a one-day story. We have small outperforming tech now, and also that's really multi-years, a decade trend we are breaking. And you see international stocks and especially also emerging market stocks super strong against S&P 500. So that's a trend going on for multiple months now. And due to this fiscal dominance theme, I expect this to hold even further. But let's start with the obvious question. How was that NVIDIA earnings? It was great. It was excellent. The numbers were ridiculous. Let's pull up NVIDIA. Let's go to the daily chart. So the numbers were outstanding. Quarterly revenue around $68 billion, up roughly 73% year on year and 20% sequential, pushing an annual run rate in the Apple zone. Yeah, so data center AI is now the whole story, and they raised guidance again to about 78 billion for next quarter. Gross margins about 75%. So that's software level margin on a chip level revenue. And yet stock pops hard after hours and gives it all back. Yeah. So and we are down -5%. So that's pure what more do you want territory. When a company beats on revenue, beats on earnings per share, raises guidance, and the market yawns or sells, it tells you expectations and positioning were already extreme. And you see, what does that mean for the broader indexes? You see that the whole Max 7 names, they are trading heavy. We are here at support. But of course, it's all difficult for them, right? And that's basically a headwind going forward. These capex expenditures, which are very concentrated and are very dependent on basically Anthropic and OpenAI. And they promised $1 trillion in revenue. And how likely is that, right? So we have to watch that carefully. So also for the S&P 500, if Max 7 is trading heavy, it will be difficult for the S&P to outperform. And it's also the reason why we launched a US large cap sector index family, because I think the next years are more active, more thematics, less about the broader indexes. And just to give you an example, year to date, you see top US energy companies up almost 21%. That's our energy index, versus the technology index down -4%. And you see more dispersion within sectors, but also across countries. And I think that's a dominant theme for the following years as well. Now, going back to NVIDIA, what did Jensen also say? The second big piece is Jensen's message about software. So he basically told the market, you've got it wrong. AI agents aren't going to kill SaaS, and they're going to use SaaS. And his analogy, your future bot isn't inventing a new microwave. It just learns to use the existing one. Yeah. So same with ServiceNow, SAP, design tools. Agents will sit on top of these products and not replace them. And why does it matter? So if you go to IGV, that's the software ETF, you see how brutal the chart is. And yeah, so that matters because software has just gone through historic selling. Worst momentum in years, huge drawdowns, monster volume into support. Yeah, so this support line, if you buy software, it makes sense at that support line. Hedge funds loaded up on shorts. So if semis are at all-time highs and software is at a big technical support with record short interest, I think the risk reward is skewed toward a face-ripping bounce at some point. So NVIDIA's print doesn't break that. In my opinion, it actually supports it. Now, going to Bitcoin, so we also saw suddenly strength with these software stocks. And you see, if we do a longer term chart, we are now at a critical level again, right? This 68K level, yeah, the old highs from the last cycle. And it's extremely important that this holds here and we have some kind of a relief rally. Yeah, you see the 22 fractal again. And so that's definitely important for Bitcoin. And I mean, you can say that we have a likelihood for a localized low, right? Because if you look at Google search trends, with Bitcoin goes to zero search terms, you also see we are at all-time highs here, right? Last time we had higher levels was in the 2022 bear market. And so normally these kind of levels speak for a localized low. Let's see. Another interesting development, let's go back to TradingView, are the Bitcoin miners against Bitcoin. And you see Bitcoin miners are going up strongly. And that's the crypto AI trade. Some Bitcoin miners are very well positioned for this data center theme. They have huge calculation capacity with their high performance mining rigs. They know how to operate data centers. And you also see that in the chart here. So it's a ratio chart, the miner ETF against Bitcoin, and it's just going up. So very interesting development. And that's the crypto AI trade. Now, in equities, let's go back to the equities again. You have got this weird combo, fundamentals firing, sentiment skeptical, and positioning offside. And so Circle also fits that pattern too. So let's show the Circle stock. What happened here? So Circle Internet Group, the USDC issuer, had a Circle-specific version of the NVIDIA story. Big beat, big move. Yeah, they reported Q4 revenue plus reserve income around the high hundreds of millions, up strongly year on year, and a sharp jump in net income as USDC circulation increased. The stock responded with its biggest post-IPO move, up about 30 to 35% in a single session. So the market is now finally treating Circle as what it really is, a levered bet on stablecoin adoption and the yield on the reserves behind USDC. So USDC supply has been climbing again, reserve income scales with rates, and now Circle is printing real profit, not just crypto growth slides. And you have the AI agents settling on-chain fantasy. But here's the but, the structural tension remain. $733 million reserve income and $461 million paid out to distributors like Coinbase and Binance. So that's tough. The valuation is now rich. After that rip, Circle trades at a high revenue multiple and a hefty forward earnings multiple of 70 to 80x. And that assumes stablecoin usage keeps compounding. So the theme is consistent. The market is willing to pay up for clear cash flows tied to structural tech or crypto trends as long as you execute. Yeah. And that brings me back to our sectors. I talked about the equity sectors. You can also talk about crypto sectors. So we have our own taxonomy. And here's a very interesting chart of our top 100 index components clustered or colored by our sectors. You have the 3-month performance here on the y-axis and the one-month performance on the x-axis. And you see a lot of them are here. Yeah, so that's momentum. Yeah, things in motion stay in motion, right? So, but what's really interesting is what's up here, right? We have Sky, decentralized finance. We have Canton. And again, I talked about that in my last video. We have Morpho, also decentralized finance, up strongly. And that's the message I want to tell you since several weeks, that you have to look for relative strength in a weak crypto market, because some participants are now focusing on real fees and clean tokenomics instead of pure leverage and messy unlocks. So Sky has become one of the clearest real yield DeFi stories. And 2025, it was among the top fee producers in the entire DeFi space, generating hundreds of millions in revenue while cutting operating expenses. So profitability actually improved. USDS stablecoin supply grew strongly and DEX activity around the ecosystem surged, which underpins those fees with real on-chain usage. Yeah. And over the last few months, the narratives has been turbocharged by aggressive token buybacks and burns. And announcements around a roughly $100 million buyback and meaningful reduction in circulating supply have turned Sky into one of the few DeFi tokens that's up, while the rest of the sector chops around. And Morpho is also blue chip lending and Sky integration. So by late 2025, it had billions in supplied assets and was generating substantial annualized interest income for lenders, thanks to its optimization layer that improves weights versus classic pool lending. So yield is everything. And over the last quarter, it strengthened that position with new vaults and integrations, including fresh USDT and USDC risk capital vaults tied into Sky ecosystem. And so you now have a loop where Sky mints and BEX are growing stablecoin and Morpho deploys that liquidity efficiently. So both protocols can show real revenue and a credible value capture story. So the market is really rewarding that combination. And I think that's really the main message here. And a broad theme over several asset classes. Don't focus so much on the super broadest indexes. Really have a look what is going on beneath those indexes. Think in sectors. Look at the sectors and look for relative strength here. So if you enjoyed this style of macro stocks and crypto recap, so hit like, subscribe, and I'll see you in the next one the coming weeks. Happy weekend.